When markets stumble, people run towards safe investments. The only thing better than safe investments is safe sectors. 5 months into 2025, and things are still a bit uncertain. There's a lot going on. We've got shifting policies, we see potential tech bubbles. And yes, there are real fears about a possible recession. The stock market? Pretty shaky right now. Many people are concerned, and rightly so. So, what's the plan? In this video, we're going to cut through the noise. We'll look at three sectors that show promise, even with these recession worries. We'll explore why they matter and how you can invest. Now here's where it gets interesting. Some say this recession is manufactured, a way to reset things. I know, controversial, right? But it's a conversation worth having. As always, we'll focus on facts. Let's get started. Chapter 1. Utility and Energy, the Essential Foundation. Alright, let's move on. Our first sector, utility and energy. Why this sector? Think about your daily life. Can you imagine a single day without it? From the moment you turn on the lights in the morning, to charging your phone, to cooking your meals, we are heavily reliant on this sector. Think about it. Gas, electricity, water. These are essentials. People pay these bills, even when times are tough. It's a fundamental part of modern life. In fact, this sector often gets better when the economy slows. It's a bit counterintuitive, but it's true. When recession hits, people cut back on discretionary spending, like vacations or new gadgets, but they still need to power their homes and heat their water. Now, there's another factor, a big one. This isn't just about maintaining the status quo. The energy sector is also seeing significant growth. AI is booming. Electric vehicles are on the rise. And what do both need? Lots and lots of power. One source says AI search, for example, needs 10 times more power than a regular search. This massive increase in demand makes energy a critical sector. The development of AI solutions is a big boost for energy producers. And it's not just AI. Research highlights that we will see more electric cars being sold, and developing economies are catching up and electrifying even more and more. In fact, 85% of the global growth in demand will come from developing economies. This explains partially why the growth in power consumption globally is expected to be 3.9% a year for the next 3 years, with China, the USA, and India leading the way. This surge in demand translates to significant investment and changes on the horizon. Japan, for example, plans to shift 40% to 50% of its overall production towards renewable energy. This means more power generation across the board. How can you invest? Several ways. You could invest in utility companies that provide these essential services. These are the companies that ensure we have a stable supply of gas, electricity, and water. Or consider energy producers. This includes both traditional energy sources and the rapidly expanding field of renewable energy. We are also seeing increased power generation from sources like nuclear, wind, and solar. Another option? ETFs, exchange-traded funds. These funds hold a basket of stocks. This gives you instant diversification across the sector. There's even one called X-Tracker's MSCI World Energy UCITS ETF, the Energy Select Sector SPDR ETF, or the Vanguard Energy ETF. You can also invest in individual stocks. Look at solid, well-established companies within the utility and energy sector. So, to recap, utility and energy, essential. Growing with a global demand increase of 3.9% per year for the next 3 years, and with multiple ways to invest, from individual stocks to diversified ETFs. Let's move to the next sector. Chapter 2. Healthcare, the constant need. Okay, let's move on to our second sector, healthcare. Why healthcare? Well, think about it. Can anyone truly avoid it? We all need it. From routine checkups to major surgeries, healthcare is a constant. It doesn't matter if the economy is booming or in a recession. People get sick. People need medicine. Babies are born. The need for healthcare remains. This is what we mean when we say it's a constant need. Several experts highlight this. They point out that even during economic downturns, spending on healthcare tends to be relatively stable. It's a non-discretionary expense. People prioritize their health. And it's not just about today. Several long-term trends are driving growth in this sector. First, the global population is aging. As people live longer, they tend to require more medical services. This creates a sustained demand for healthcare. Second, medical technology is constantly advancing. We're seeing breakthroughs in pharmaceuticals, medical devices, and treatments. These advances improve patient outcomes and drive further investment in the sector. Researchers mention revolutionary healthcare breakthroughs as a key trend. This innovation fuels growth, regardless of the economic climate. So, how can you invest in this sector? One way is to invest in pharmaceutical companies. These companies develop and produce the medications we rely on. Another option is biotechnology companies. They are at the forefront of developing new and innovative treatments. Medical device manufacturers are also a key part of this sector. They produce the equipment and technology used in hospitals and clinics. You can also consider investing in healthcare service providers. This includes hospitals, clinics, and other organizations that deliver healthcare directly to patients. And, as with other sectors, ETFs and mutual funds offer a diversified way to invest in healthcare. These funds hold a basket of healthcare-related stocks, reducing risk. You could also consider companies like AbbVie as dividend-paying companies within the healthcare sector. These can provide a steady stream of income, especially during economic downturns. In conclusion, the healthcare sector is driven by constant need, long-term demographic trends, and continuous innovation. It offers a range of investment opportunities, from individual stocks to diversified funds. Now, let's move on to our final sector. Chapter 3: Cybersecurity, the ever-growing threat. Okay, let's move on to our final sector, cybersecurity. Why cybersecurity? Well, in today's world, everything is connected. Our data, our finances, even our critical infrastructure, it's all online. This creates a huge target, and that target is growing every single day. Think about it. We hear about data breaches constantly. Hackers are becoming more sophisticated, and the threats are coming from everywhere. Leading cybersecurity experts talk about states against states, and how even individuals are targeted. We hear mentions of the cloud expansion and the fact that AI is everywhere. This means the need for cybersecurity is not going away. In fact, it's only going to increase. As more and more of our lives move online, the more we need protection. This isn't a luxury, it's a necessity. Some analysts are predicting double-digit growth for this sector. That's significant. So, how can you invest in this ever-growing sector? One way is to invest in companies that provide cybersecurity software and services. These companies are on the front lines, developing the tools and technologies to protect us from cyber threats. Another option is to invest in cybersecurity ETFs. These ETFs offer a diversified way to gain exposure to the sector. They hold a basket of cybersecurity companies, which can help to reduce risk. Some notable cybersecurity ETFs are the Global X Cybersecurity ETF, ticker BUG, the Extra Cybersecurity Select Equity ETF, ticker PSWD, and the Wisdom Tree Cybersecurity Fund. You can also invest in individual cybersecurity stocks, but as always, do your research. In conclusion, cybersecurity is a critical sector in today's digital world. The increasing sophistication of cyber threats, combined with our growing reliance on technology, makes this a sector with significant potential. And there are several ways to invest, from individual stocks to diversified ETFs. That wraps up our look at 3 sectors that show promise even in the face of a potential recession. Chapter 4: Conclusion. And that brings us to the end of our discussion on navigating the potential 2025 recession. Remember, recessions don't destroy wealth, they transfer it. Wealth flows from the unprepared to the prepared. And you don't need to be a Wall Street insider to protect your hard earned money. You can start taking action today. We've explored three sectors: utility and energy, a fundamental and growing area, though sensitive to interest rates and regulation; healthcare, a sector driven by constant need and long term trends; and cybersecurity, a critical sector in our increasingly digital world. The goal isn't to eliminate risk, but to manage it effectively. By focusing on diversification, risk management, and staying informed, you can build a resilient portfolio, a portfolio that is well positioned for the future. The investment landscape is constantly evolving. Staying updated with the latest trends, regulations, and market dynamics is essential for long-term success. Thank you for watching. If you found this video helpful, please like and subscribe for more insights. And as always, do your own research before making any investment decisions.